How are you now? Occasional talking head for smallcaps.com.au. It's James Whelan here. And it's my very, very special, amazing honour to welcome to the show Alexander Scanlon, Barton Gold CEO. Last time I spoke, very impressed, a very impressive team you've got with regards to the way that Barton runs. It's great with... Actually, we'll go into it. Actually, I'm not going to do it too much. Alex, it's great to have you back on the show.
Thank you, James.
Okay, look, I'm all words, and I think that's your job is to tell the words. My job is just to ask the questions here. Last time that we spoke in August, Barton was making strong progress on its regional strategy. Since then, there have been some significant developments, which is why we're talking right now. Let's dive in. 2025 has been described as a pivotal year for Barton Gold. Can you summarise for us the key milestones that marked Barton's transition from explorer to developer?
Yeah, like Barton, I guess, as an entity really has spent the last 5 years laying the pathway for large-scale growth and development. We essentially captured and consolidated the majority of all main historical exploration and producing gold assets in the Central Gawler Craton of South Australia. We stepped back, we've built that up to about a 2.2 million ounce gold resource that is now anchored around our large-scale long-term asset at Tunkillia. So this is the asset that takes us to scale, and we've created this sort of destination of, let's say, institutional significance in terms of value. And then we went back to our sort of stage one asset, and we demonstrated that that asset can be cheaply restarted, that it has 300,000 ounces of gold there. So it serves as a very valuable stepping stone, not only into operations, but to that large scale destination. And now we've finally gone out and are also expanding into our regional development strategy, which will continue to build that long term. So in a manner of speaking, we've spent the last 5 years putting together a 15-year production and growth pathway for a large scale gold producer.
And it came across when we spoke in August as well as is this amazing record that you've got of funding operations through asset monetisation rather than through dilution, which is great for shareholders. Now, how important is that strategy as you're moving into this next stage?
Look, it's been very important in the past, as well as moving forward. So if we think about obviously moving through the earlier stages of a business like our own, we are net capital consumers. So if we can also actually be producing capital internally, it means that we need less funding support from our shareholders. And while we have never had any trouble generating funding support, I think one of the reasons for that is that our shareholders really, really like the fact that we've been able to achieve so much with so little. Looking forward, what we've been doing over the past 5 years is establishing, if you will, a staged, lower cost, lower risk, and therefore lower dilution pathway to large scale production. So low dilution on the way here to establish something that we can then get to scale with low dilution on the way forward because we have the benefit of established infrastructure. So this low dilution model is really synonymous with our brand in the industry, I think, and part and parcel of the way that we sort of look at ourselves as asset managers as much as we look at ourselves as explorers and developers.
That is a great answer and great for shareholders as well. So now let's get into the nitty gritty. So you've just released the new assays from the S1 starter pit. Walk us through the results and what they mean for the project overall.
Yeah, so this is from the Tunkillia project, the second of our assets, the large scale asset. And one of the reasons we were very attracted to this asset was our suspicion, going back to the early days of looking at this asset, that it might be hiding a higher grade zone in the middle. And that was one of the first things we drilled and validated about 4 years ago. And what this is a 300 meter long higher grade zone right in the middle of a 3 kilometer deposit. So we're looking at this big bulk open pit operation, which becomes a large scale development, but it has the advantage of this enhanced grade profile, which forms our stage one or our starter pit. What this means is in the first year of operations, this project is currently modeled to produce over $800 million in operating free cash from an elevated grade profile. This pays back the whole project 2 times in the first year. So this is a very strong financial profile, a very compelling financing profile for our credit partners. So the drilling that we've just done was focused on not only upgrading both our stage 1 and stage 2 pits to indicate the status to be able to convert those into reserves, but then more densely drilling that very high value central portion of the stage 1 pit to take that all the way to measured and essentially make that rock solid in the eyes of financiers to underwrite the financing of the project and essentially underpin the development of this asset as a very fast payback asset.
That does make a lot of sense. So the optimized scoping study already showed some impressive metrics. There's 73% IRR and a sub 1 year payback. Nice. And how do those results reinforce the economic profile?
So the results that we just announced today are around this sort of stage 1 starter pit area. Now that stage 1 starter pit in our model was estimated to have an average grade of 1.19 gram per ton. So 1.19 gram, big bulk, 5 million ton per annum operation can be very, very profitable given the sort of economic horsepower and torque to marginal grade that you find in mills like this. The results that we published today were broad, higher grade intersections. So we had intersections that were 30 to within sort of 70 meter intersections that were 20, 30, and 40 meters of grades anywhere from 2 to 3.5 gram per ton, with some peak grades in there that were actually getting up to 20, 30, and 40 gram per ton. So what it does is it infills the data in this really high value area. It increases our confidence in those grades. We'll see what happens to the actual overall grade profile, but what it means is we can now move forward and essentially crystallize that very, very fast payback profile that makes this asset so attractive as a growth asset.
Yeah, well, it's good to pay back as quickly as possible, which is, so I'll be following that quite closely. And generally speaking, in Tunkillia overall, what's next for that particular place, and when can investors see something jolt?
So the Tunkillia resource right now is indicated and inferred. This first round of drilling will be getting the balance of the drilling assays back throughout December and January. So this is the first probably 3 to 4 batches of assays. Once we have all those back, we will upgrade the stage 1 and stage 2 pits, these sort of central most higher value areas, by the end of March. We would expect to have that upgraded to measured and indicated. At that same time, we will start the second phase of the upgrade drilling, and this will take all of the rest of the optimized open pit mineralization to indicate status, so therefore capable of being in its entirety proven and probable reserves. That drilling will go from March to June of next year. We would then expect to have the full upgrade done by September, convert everything to ore reserves, publish a feasibility, and then also submit our mining lease application by the end of 2026. So it's very much full go in all respects for this project.
So 2026 really gets that runway into the mining license, and then a huge takeoff in 2027, I'm sure. Now let's move over to Central Gawler, the Central Gawler mill. How's the refurbishment and feasibility work progressing over there, and what's the timeline on the operations for that one?
Yeah, so the objective with the Central Gawler mill is essentially to run directly in parallel with all the work we're doing at Tunkillia. So Tunkillia applied to build it at the end of 2026 and then push through that cycle as fast as possible. The Central Gawler mill, the sort of stage 1 platform, we are looking to complete all the works necessary to restart site operations also by the end of 2026. So both of these are charting out in parallel. We have a definitive feasibility study underway right now that's focused on 2 phases of operation. The first phase starting with a lower risk approach, processing higher grade, simple historical gold tailings. And then the second phase starting to blend in higher grade fresh rock ore. So that DFS will be completed in those 2 phases, reflecting those 2 phases of operations during March and June. We will then essentially move forward into procurement and then commissioning. The good thing about that site is, aside from being a fully established plant, it is fully permitted, fully licensed. So it's something that we can then move through very quickly with a relatively low cost and low risk, essentially cross that bridge from developer to producer with a low cost burden and a low risk burden.
Okay, so beyond Tunkillia and Central Gawler, Barton, you've also been active regionally. Did you want to share some updates on Wudinna? I hope I pronounced that correctly, and the Tolmer discoveries.
Yeah, so a lot of the way that we focused on growing these assets was based on taking known bodies of mineralization, stepping back, rebuilding new geological models. We trialed a lot of new different technologies. We applied some old existing technologies in new ways. So we were able to demonstrate that the mineral footprint of these projects was much greater than was historically recognized. And a lot of that also just generated a lot of new predictive modeling around regional structures. Now, one of those structures that we tested at our TOR project, so this sits between the Central Gawler mill and the site of the future tank, we predicted a new major structure there that looked like the one that created the historical gold field there where people were mining for 100 years from the late 1800s. And we drilled that in May of 2024. In August of 2024, we announced a gold discovery. What is perhaps more exciting, or at least has been more exciting, I think, in the popular imagination, is right next to that gold discovery, we have made a very high-grade silver discovery. We announced that in March of this year. The peak grade there was 17,600 grams silver within a grade interval of about 6 meters of 4,750 gram per ton silver plus 13 grams per ton gold. So this is very, very high grade. It's very unusual in Australia and in what is traditionally an historical gold field. So what we found there seems to be, yes, indeed, a technical success in terms of an analogous structure. Yes, indeed, possibly quite an economic success, both in terms of high-grade gold and high-grade silver, but it appears to be quite different to what's happening around it. And different is usually pretty interesting in geology. We've drilled that, I think, 4 different times this year. We've now expanded that north, south, east, west. We've published some soil assays around that, demonstrating that the sort of surface expression of that gold, silver, lead footprint expands there. And we're now waiting for some diamond drilling results to come back to try to help us work out what's going on both structurally and stratigraphically there so that we can go back onto that and try to pursue it a little more intelligently. Obviously, if that has any footprint at all, it becomes an incredibly valuable source of material to feed into either or both of our mills. And then Wudinna, pronounced quite correctly, it is our first acquisition as a public company. So it kind of marks our stepping out into what we might think of as our regional enhancement strategies as we think long-term around these 2 key processing hubs that we're building.
Yeah, and so it's fitting the long-term growth strategy for Barton Gold's overall, apart from just Wudinna, do those assets have any shape with regards to the entire...
They do. So the way that we think of them is essentially, and again, we sort of think of this as regional enhancements, right? So if you have 2 mills, presently we have the only gold mill in the Central Gawler Craton. When we build Tunkillia, we will have the only 2 gold mills. And so if you have this existing infrastructure, and again, we think of the Tunkillia project, this higher grade, very, very fast payback period in its first year of operation. That is really about maximally leveraging the sort of economic horsepower and torque to marginal grade that you get in existing infrastructure. So we ask ourselves, what can we do, whether through our own generative exploration or through M&A, to identify sources of higher grade material that we can then blend into these mills and essentially further leverage this established infrastructure, which is already fully paid back. The Wudinna project is very interesting here. So we know that Tolmer has very high grade material. That makes sense that would blend attractively. Wudinna is very interesting. It's a 279. We expect that to grow. It's a typical asset that's been historically under-drilled, but it has very interesting metallurgy, and it is on the main highway that connects to our mills. So the preliminary metallurgical test work there indicates that you can actually concentrate about 90% of the gold into 6% of the feed mass. And so what this means is rather than building a whole new third mill, we can build a smaller installation, much lower cost, much lower permitting requirements, where we simply crush, grind, and float, say, 600,000 tons of ore into 36,000 tons of high-grade concentrate, grading on the order of 25 gram per ton. And that can then just go on the highway. That's essentially 36,000 ton per annum is 100 tons per day. That's 2 trucks on the highway going up to our mills and tipping that in. Wudinna on its own might not look like a big deal, but the sort of enhancement that it provides to infrastructure like Tunkillia or the Central Gawler Mill is sort of like bolting a supercharger economically onto the side of an already high-performance engine.
That's not a bad metaphor at all. I love that sort of chat. Now, gold, speaking of high-performance engine, let's talk about gold as a thematic for 2025. It's been quite a year. De-dollarization, remonetisation, central banks purchasing. Also, I think there was some chat about one of the stable coins is now a fairly significant owner of gold, which makes no sense to me. But anyway, look, I'll take it where I can. How do you see these macro factors influencing Barton's financing and development plans?
Yeah, so these are all factors that we've been tracking for a long time. In fact, Barton and its strategy in Australia was specifically formed around a long-term, essentially global macro bet on credit, geopolitical problems, inflationary risks, and then effectively a view towards de-dollarization of global trade. Certain things in the interim have happened to accelerate them, right? So obviously the conflict in Ukraine between Russia and Ukraine is essentially erupting as a proxy war between kind of the East and the West, or the global South and the global North, and people put themselves in all these different baskets. The U.S. administration's response specifically to essentially sanction not Russia, but Russia's U.S. Treasury assets made fully and finally clear to the world that U.S. treasuries are in fact not a reserve asset because they are subject to basic political punishment. So that was really kind of the 10-ton load of bricks that broke the canvas back in terms of the desire for people to hold pretty much exclusively US dollars. I think in terms of where we stand today, what we have to really consider is that the world went through a 50-year process of essentially commoditizing dollars, making dollar the item of demand for the investment of trade surpluses and for sovereign savings. And this essentially demonetized gold, it demonetized commodities. We're now seeing a rotation or a movement in the other direction. And we are essentially now 2 years into unwinding that 50-year trend. So when we think about what this means, there is a long way left to go before gold as a proportion of net global settlement for trade, or as representative of the amount of printed currency out there in the world, which is only accelerating. There's a long time to go and a long way to go before it finds those two equilibria and kind of reasserts its place in the world. For us, I think what that means is the view we took was we needed to rush these assets really hard for the last 5 years to get ready to benefit from this market and trend when it happened. We have done that. We're positioned for that. And we see this trend continuing for a very, very long time. It will not be without volatility. There will be tug of war between long-term thinkers and short-term thinkers, between those who very much don't want to see a US dollar-centric world evaporate. And the truth is US dollar is not going anywhere. It's not going to be the US peso. It's not going to collapse. It will just no longer be the reserve currency. It will be a reserve currency. But this means a lot around sort of nominal inflation for US assets in particular, and in particular gold, which has traditionally been considered a US dollar priced asset, but now is essentially asserting a relationship more akin to the gold price relationship you'll find with other currencies.
Got it. Okay, well, that does make a lot of sense. I think we could probably pick apart each other's brains on the macro outlook for gold and probably come to the same conclusion, I'm sure. Now, you did mention that some earlier conversations with credit financiers. What does the financing roadmap look like for Barton?
So obviously, we've got a couple parts to that. Is mapping out exactly which mineralization is going to go through each facility in a particular order, to completing the definitive feasibilities around these particular things, and then presenting this to credit financiers who will assess these cash flows. In both cases, Tunkillia, the second stage asset, plays with the advantage of a very, very strong payback profile. Now, every credit financier wants their money out for 3 to 5 years, but they want to know they can get it back in one if they need to. So that is a process that is really wrapped around this upgrade drilling that we're working on right now. That's why we've accelerated the stage 1 drilling there. The stage 1 process with the Central Gawler Mill, these are early conversations that we're having with a number of groups who are interested in the fact that we, in that case, had the advantage of established, fully permitted infrastructure. So we don't have to build a mill. It is not an order book of components and essentially a promise to build on. It's an established facility. It has established security value. So we're advancing those conversations in parallel with the commercialization pathway of both of these assets. And we would be expecting to announce financial arrangements for stage 1 in the first half of next year in parallel with the completion of our feasibility work.
Okay. Well, that's a good overview there, Alex. Thank you very much for sharing the insights that you've got. Barton, well positioned, you've managed to build up a nice little company, and now moving into what's going to be pretty exciting 2026 with production. Any other messages for shareholders before I leave it here?
Well, probably not. It's other than to say it's been a very, very busy year. It's been a very busy 5 years. It's been extraordinarily formative past year as we've crystallized all these things. And we're essentially now pivoting into commercialization. So it is very much a case of looking back to looking forward. I think we have a very exciting pathway ahead.
Well, I'm looking forward to seeing what's going on in 2026 and talking to you about it all there on Small Caps. Thank you very much for joining us, Alex Scanlon of Barton Gold.
Thank you, James.
All right. I've been James Whelan, and I still will continue to be James Whelan for smallcaps.com.au. Have a great day and stay safe.